Tesla shares broke all-time highs yesterday, and today it even broke the $400 barrier. Tesla longs are just going crazy. They're ecstatic, giving each other high fives and saying this is crazy, the best day, etc. But I don't care, and I'm going to share why. All right, well, I do care a little bit, and I care because I'm a Tesla long as well. I'm a longtime Tesla shareholder from back in 2012, and I haven't sold the shares that I bought back in 2012. So obviously I'm long and I care whether the stock is at 400 or 180, but I don't care nearly as much as most Tesla investors and longs. And here's why. I'm gonna share kind of my whole kind of background on why I can be calm at 400 and why I can be calm at 180, all in the same year or within 6 months period. You see, I think a lot of times people are so focused on the short-term price movements of a stock that they get kind of carried away by the news cycles. And then they think that, oh my gosh, it's gone up $10 today. Why did it go up, you know? And they look for reasons to explain why it went up $10 or why it went down $10. And so you have these people there, I call it kind of short-term news chasers. And they like, oh my gosh, this analyst put out a report and that's why it went up $10. Or this person, there was some type of critique or bad news article and the stock went down $5. And when I look at all this stuff, and it's rampant all over the internet, not just with Tesla, but with almost all these stocks, especially the big names out there, people are so focused on the short-term price movement. It makes them so focused on the short-term news where they overemphasize and they kind of distort the short-term news to make it think like it has this huge effect on the stock price. But the reality is the stock price is moved to a certain extent by news and a certain extent by bot traders and short-term traders, etc. But the large price movements are largely driven by the big buyers and the big sellers. You see, we're talking about big buyers and big sellers that are buying or selling billions of dollars worth of stock over a period of several weeks or a few months. Like, this is what moves stocks in a big way. And a lot of times, most of the time actually, this movement is shown only in the stock price, but people don't know why the movement is happening because it isn't transparent. It might be transparent later on if a fund, for example, has to report their quarterly holdings and it might come up. But then again, there are some people who, for example, private shareholders, they don't have to report how many shares they have. So maybe some of this stuff doesn't even get reported. But regardless, when you're so focused on the short-term price movements and the short-term news cycles, you miss out on the real nature of big price movements, which is big buyers and big sellers are largely driving the big moves up and big moves down over time. Now, this is important because when we broke all-time highs yesterday and we broke the 400 barrier today, people are saying, oh my gosh, it's the China ramp or it's the Q4 production numbers. They're getting leaked and it's like 110,000 maybe. And there's all this speculation, but the real driving force that I think is happening is there are big buyers coming in to buy Tesla at these levels and think that Tesla is going to go much higher and is worth much higher than this. Now, let me share a little bit more about this. Jim Cramer of Mad Money last week came out and he was like saying, I'm a big Tesla bull. But his whole explanation of why he became a big Tesla bull was, in my opinion, big bull. Because he was saying, oh, my daughter drove it and my wife wants an X and we're getting the solar roof and everyone loves it. But the thing is, he's been saying this for years. He's been saying it for years, how it's a great car and, his friends have been saying it's a great car and his kids are saying it and all this stuff, but nothing has moved him. And it wasn't until recently where he says, hey, I've changed my mind. I'm a big believer. I'm a true believer, right? Now, to understand what's happening, you have to take a step back. Jim Cramer, in my opinion, here's my analysis of him. Jim Cramer is not necessarily the best independent thinker. Jim Cramer, in my opinion, is more of a follower. See, he looks at these industries and these trends, and he has a pulse on Wall Street because he's got a lot of friends in high places on Wall Street that control a lot of money. And he's constantly like talking with them saying, oh, what's the next hot trend, or what do you think about this company, etc. And Jim Cramer, and he's smart to do this in some ways. He's not making up his own independent, per se, analysis based upon the company's financials and past 5 years, history and 5-year projections. He doesn't really have time to make his own 5-year projections of different companies. He's busy just trying to keep up with, all these industries and 100 stock names so he can just appear to know everything about anything. But the reality is he's getting his info through a lot of his connections. And for a controversial name like Tesla, the only way Jim Cramer, in my opinion, switches to becoming a so-called true believer and bull of Tesla, which apparently he is now, is he hears from the street, from his big names on the street, that they have shifted their thought. They have changed their mind on Tesla. And now that they are big believers in Tesla, that's the only thing, in my opinion, is going to sway someone like Jim Cramer from being a skeptic to becoming a so-called believer in Tesla. Now, here's the reality. Tesla has been such a controversial name, partly because it's had this huge ambitious goals and this amazing product, but the financials haven't really caught up yet, meaning they've had to spend a lot of money, they've lost different amounts of money in different past quarters, and as a result, the prevailing attitude about Tesla on the street amongst the big names in finance and in funds has been of skepticism. Now, of course, there have been people that have been basically very bullish on Tesla, but that's a very small minority. And those who have been very, very bearish on Tesla has been a small minority too. And I would call this more, they're the fringe players. I mean, yeah, they might be like, 5% of, on Wall Street might be bullish and 5% might be very bearish. And from that, you have the ideological, longs and the ideological shorts. And you've had to battle this. And mostly the people in the middle have been pretty skeptical, saying, yeah, I don't know about this, And I think what's happened recently is a big shift, a perception shift in Tesla. And this is why I think Tesla has broken all-time highs and has entered the 400s. It's because the people in the middle, the people we're talking about, 90% in the middle that have been skeptical of Tesla, has finally, the key leaders of these people in the finance world, in the Wall Street world, has now shifted their views, and now people are following that shift. Let me explain. I think this past Q3 earnings that Tesla reported at the end of October, this was basically the trigger point. And it showed a few things. First, it showed that Tesla could decrease their operating costs, their operating expenses. And this was basically a surprise for most people. Tesla is so lean at this point, is that their whole ramp of Model 3 didn't really add much at all to their operating costs. Imagine, you go from making 0 Model 3s to making let's say 3 to 400,000 Model 3 run rate a year, and yet your operating expenses don't even go up at all. That's an amazing amount of leverage that Tesla is going to have going forward. And what Q3 showed was, yeah, Tesla can actually grow without growing their operating expenses. What does that mean? It means that whenever they're making new cars, like the more Model 3s or Model Ys, their costs of hiring people, factory workers, and people to assemble and make the Model 3s isn't going into their operating expenses in their profit loss statement, rather in their income statement. Rather, it's going into their cost of goods, meaning it's going into the cost of revenue, how much it costs to basically make something. So that's part of their margin. In other words, the amazing thing about Tesla, and I think the eye-opening thing that I've been promoting, I've been writing about online as well for many years, is that there's a point where Tesla is actuating and realizing an immense amount of operating leverage, where they can grow revenue very, very fast without growing their operating expenses much at all. And by doing that, all that gross margin that they're achieving with the additional revenue goes straight into gross profit, which affects their net profit. And I think Q3 in 2019, back in October, was the turning point where it showed, oh my gosh, Tesla's actually operating expenses aren't going up with their growth, and yet they're able to get that gross margin and pull it through into net profits. And I think the first group of big kind of Wall Street names, that Q3 earnings report was the big eye-opener where it says, oh my gosh, it's true. Tesla is moving into a profitability kind of point, a trigger point, a turning point, and next year it could be very, very profitable. And if you just do the numbers, Model Y, it has better gross margin than Model 3, but yet Tesla's operating expenses don't even have to go up at all or much, because all of the people that Tesla is going to hire for the Model Y is actually just coming from cost of goods, from the revenue side, right? It's just, and so that's all that gross margin will be pulled through into gross profit and eventually, increase their net profit. And this is an amazing kind of like, it's just straight in people's eyes, but no one really is talking about it. And I think the early kind of like smart fund managers and big money on Wall Street is realizing this, and Q3 was a big eye-opener. And the second thing I think that changed the perception amongst the kind of like the influencer, kind of like the key leaders with big money on Wall Street is the Cybertruck. Now this is kind of silly, but Jim Cramer mentioned this one point, is like, yeah, Elon threw a steel ball and it cracked the window and the stock price dipped, but it went back up and no one cares anymore and everyone wants a Cybertruck. This is amazing. Now this is kind of a ridiculous reason why perception would change in terms of an investor, or why you should buy the stock or not buy the stock. Sure, Cybertruck was an amazing move, and check out my video on the Cybertruck, why I think it's definitely design genius and it's next level in many ways. But because there was a decent reception to Cybertruck, that's not necessarily per se the reason why you would value Tesla on a completely different sphere and why it would break all-time highs. But the reality is, these people on Wall Street, the people who hold the checks to big money, you would think that these people are very objective and very rational and etc. And yes, a lot of them do have the office and the suits and etc. and the so-called experience. But the reality is they're very emotional in many ways, and they're very biased in many ways. And because of that, when you see something like a Cybertruck and you see the reaction to that, it just kind of like confirms a little bit more of your sense that you're already going to jump in. Meaning the Q3 earnings report was the trigger point, was like, oh my gosh, Tesla actually could become very profitable. And Cybertruck was just kind of a silly, in my opinion, reason why more of these Wall Street kind of people can give another excuse to jump on board and say, okay, I'm getting in on Tesla. It's a great company, and just what Jim Cramer is saying. It's like he doesn't even explain why the Cybertruck was one of the reasons why he became a Tesla believer, but it's one of those reasons. And so the whole point of it is these fund managers, these big kind of like Wall Street, check holders, they don't necessarily have to have objective reasons per se completely to become a so-called fan of a stock. A lot of times it could just be emotional, and oftentimes it's because they're following other people. They hear their friend who owns, who's a manager of this, 15 billion or $30 billion fund or whatever, is getting into Tesla and loves Tesla, and they had lunch together, and then so now the other guy is going to become a Tesla fan because this guy's a Tesla fan. And just get a group of these people together that manage 10, 15, $20 billion funds together, and they say they're all Tesla bulls now, and pretty soon all of the herd, all the Wall Street herd starts to like Tesla, right? It's just contagious. And you would think that Wall Street is much more advanced than this, but in reality, this is human nature. Human nature is a lot of followers, very few independent thinkers, very few pioneers, and most people are following, just trying to be second or third. And that's the same thing what's going on Wall Street. Now, it's important to understand this because you could say, you can understand now the news cycles a little bit more. When Tesla broke out to 370, 380, people were saying, oh my gosh, yeah, it's the extension of the tax credit, or it's a China rant. But then the tax credit went away, or the extension of the tax credit, the talks got canceled. It wasn't in the budget, yet the stock didn't do anything. It went higher, actually. It didn't go lower. And people are like, oh, it must be something else. It must be China ramp. But the China ramp, we've been knowing for many, many, many months that this is what Tesla is planning to do. And China, and as of today, Tesla hasn't really delivered customer cars yet in China, yet right, there's this breakout. And so I don't think it's the China delivery. I don't think it's the so-called talks of federal tax credit, which actually didn't even pan out, or a so-called analyst report per se. It's basically people on Wall Street, the people, and I'm not saying all of them, but there are people who hold a lot of money, and it could be just a few right now, but they've decided to buy into Tesla with large amounts of money. This is moving the stock, but I think that actually going to 2020, we're going to see perhaps a potentially bigger move. Now, again, this is not financial advice, any of this. This is all speculation. This is all my opinion. Do what you need to do based on your own information. But I think 2020 bodes pretty decently because I think this, as long as Tesla's able to execute, right? As long as they're able to execute Model 3, Model Y, execute their China plans, continue on with Europe, etc. I think there's good chance, and I shared this in my video on why I think Tesla is going to join the S&P 500 next year in 2020. But in that video, I basically share I think how Tesla's profitability is going to increase, and that's going to change perception around Tesla, and it's going to increase the amount of people, especially on Wall Street, the holders of big money. It's going to give them more confidence to invest in Tesla, and that's going to affect its stock price, obviously. Now, you can use the same type of analysis and perspective to understand why Tesla went down to 180 just 6.5 months ago. And with this perspective, I hope you can understand why I was pretty calm. Like, I'm calm right now, and I'm calm when Tesla's at 180 just 6.5 months ago. And here's the reason why. See, Tesla goes down to 180 just 6.5 months ago because they are sellers, big sellers, meaning people who hold a large amount of money are selling large amounts of Tesla stock. That's why the stock is going down. People during that time were having all these speculations on this analyst downgraded it and this analyst downgraded this news item or blah, 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 right? And a lot of times the stock price isn't really correlated to the true health of the company, meaning the company can be doing great, yet the stock price can be low, or the company can be doing terrible, yet, or I don't say terrible, but could be starting kind of its downfall, yet the stock price could be very high. And a lot of people correlate the stock price with the health of the company. Now, let's take a step back. I think to a certain extent that can be true if the company is dependent on the financial/capital markets for their existence and survival. Meaning, if you have a financial institution or some company that without capital infusion, that they're dead. That they cannot grow, they cannot sustain, they cannot survive without capital infusion. Now, those type of companies, their stock price actually affects the health of the company, because if their stock price is too low and it goes to zero, then basically no one wants to fund their company, they're dead, even if they had potential. But if their stock price is very high and it's easy to access capital markets, then they have a better chance to survive. Now, Tesla's story is kind of mixed with this, because in the past, Tesla was dependent on the capital markets for survival early on. And I think there was a shifting point where Tesla didn't need the capital markets for survivability. But yet there was this appearance that Tesla was kind of so shaky and in need. And I think that whole kind of battle of, does Tesla need money? Can it survive without, let's say, capital infusion? That was a big kind of issue going into the Model 3 ramp and into the production hell with Model 3. And the question was, does Tesla need money and can it survive without money? Now, I think this was exacerbated a bit when Elon Musk was basically saying, we're not raising money, right? That's off the table. We're going to ramp Model 3 without raising money. So he kind of put an artificial type of rule of law down, saying, we're going to do it without raising money, even if it's harder. And I think in a way that exacerbated kind of the fear that Tesla wouldn't be able to survive because they're not, and they wouldn't be able to access money. In the long run, long term, I think that that's actually pretty interesting move that Elon did, because it could actually produce more discipline and more rigor to conserve finances, which I think it did. And I think it all kind of wrapped up back when Tesla, after their investor day, they did a cap raise, a few $billion, shored up their balance sheet, and basically showed that they have enough money. But then there's still this question mark: if they still lose money, what if they need to go back to the capital markets? They're still dependent. And then Q3 earnings, back in late October, again, this was the turning point when they showed the markets and they showed Wall Street, they showed the big names that, hey, actually, they're not that dependent on the capital markets anymore. Actually, for survivability, they're not dependent at all because they've lowered their operating costs enough. They're achieving enough margin and revenue where they can cover all their expenses with their gross margin. And they basically said, hey, we've got $5 billion in the bank and we're profitable and we're not dependent on the capital markets anymore to survive. And this was a huge thing because now it deleverages the influence of the shorts and it deleverages the influence of those who are trying to take Tesla down. Now I need to explain this a little bit more. See, a lot of the shorts, a lot of the big names in the short world, like the Icons and the Chainoses and all these other people, a lot of times their easiest targets for shorting are companies that they think are overvalued, yet these companies are dependent on the financial markets and on the capital markets to survive, meaning they need a constant inflow of money some way, whether it's loans or equity, cap raise, etc., to survive. And those companies are great for these big short sellers to basically be vultures and attack. Because I don't say great, but that's their game plan. Because if they truly think these companies are overvalued, then they run a disinformation campaign. In their words, it's information campaign. They run a propaganda campaign to try to plaster the media to see how overvalued these companies are, and then they seed in these like kind of thoughts of fear of this company really is worth negative, or this company really is worth nothing, right? And so the capital markets actually are very susceptible to media and to the herd, right? And because of that, the capital markets basically start to get fearful of these companies. And basically the stock starts to go down, people start to pull money out. As the stock price goes down, it looks like their ability to access the capital markets is also going down. And as the stock market goes down, it actually fuels more evidence amongst the capital markets that this company is going down. And so the capital markets start pulling away access to the capital. Shareholders pull out their money, it starts to go down even further. And what you have is a spiraling company that might have had potential before, but now everyone's going against it, and now they have a harder time raising money, and that's their lifeline, right? But with Tesla, what Q3 did and their earnings report is it basically showed, hey, enough is enough. We're getting out of the game. Basically, we're not dependent on the capital markets to survive anymore. Look at our balance sheet. Look at our income statement. We're fine without it. And I think what happened was the shorts basically lost their leverage against Tesla. The whole kind of campaign against Tesla hinges on kind of like this main thesis that Tesla is going to go down. They're overvalued and they won't have access. They have access a little bit, but eventually they won't have access to fuel their growth because it'll all come tumbling down and Tesla can't make money and will never make money, right? But when Tesla showed that they're making money, they don't need access to the capital markets anymore to survive. Now the whole foundation of the world of shorts against Tesla now is shaken, right? And this is kind of the ridiculous thing. There's still these shorts out there against Tesla who still kind of are doing some type of propaganda campaign. And I won't name these guys, but you can name them in the comment section. They're on Twitter, they're on Seeking Alpha, they're on whatever, podcasts, etc. And if you listen to them, I can't even listen to them. I might listen. I tried to listen to them one time, a month ago for like 5 minutes, and it was just so mind-boggling the insane kind of arguments that they're bringing against Tesla. Now, I'm not saying that everything they're saying is complete nonsense. What I am saying is that you got to focus on what's important for a company, right? You can't say, hey, this company's choice of a logo has the wrong pastel color, therefore I hate it. Like, who cares, right? You can't say, oh, the founder's hairstyle I don't like, and let's short the company. It doesn't matter. It's all about the company's growth and revenue and eventual profits. How much the company is going to be worth in terms of its fundamentals down the road, whether it's 5 years down the road or 10 years down the road. It all depends on what stage the company's in. Now, so what Tesla did was it basically sucked the life out of the shorts. And that's why I think you also have another kind of puzzle piece of Tesla breaking out to all-time highs, because the shorts kind of thesis is broken, and now this has freed the minds of some of the big names on Wall Street to finally like say, hey, Tesla's can be very, very profitable, and they do it at the right time. The pioneers, like the first movers on Wall Street, they're starting to pick it up and pick up stock in Wall Street, stock on Tesla, knowing that 2020 is probably going to be a very good year for Tesla. The way I look at it is kind of silly. It's like in high school. You know, high school can be so silly sometimes. Like you have a group of popular kids, and you know, let's say there's this other kid who's always kind of like, they're kind of like skeptical. They don't hang out with that kid, and eventually one of the kids in the cool clique, let's say one of the leaders in the cool clique says, hey, that guy's kind of cool, you know? And then all of a sudden, all of the cool clique says, yeah, he's cool. And then they invite him into the cool clique, and now he's part of the popular crowd. It's like the most lamest, right, thing in some ways. It's like human nature, though, in some ways. And now this guy's part of the cool clique, right? And in some ways, that's what's happened in the past, I would say, 2 months with Tesla, is for many years, Tesla's been an outsider. It's been basically the cool kids on the club have been kind of skeptical of Tesla and have kept them out of their circle. But I think what has happened in the past month or two, Tesla has changed, or actually a few of the leaders in the cool club has changed their mind about Tesla, has said, now I think Tesla's cool. Now all of these like inner circle kind of like cool kids are saying Tesla's cool, and this is just going to grow. Now eventually the whole school is going to think this kid is cool, right? But it works the opposite way too, right? People say, hey, this guy's a loser, and then they, you know, people think that they're a loser. But in fact, like, here's the thing. Does that really mean that the kid is really popular or going to succeed or is really a loser, etc.? And it doesn't, right? Think about it. A lot of the people in high school, they were considered losers, but yet they end up being, you know, running massively successful, you know, large companies, etc. And it's just because your popularity in high school, you're popular in high school doesn't determine your career trajectory, basically, right? Like that's how unrelated it is. And in a similar way, like the perception of a stock in a company from Wall Street and investors, and also correlated their stock price, isn't really related to the health of the company. Now, this is the big point I want to push, and the reason why I'm calm at 400, I'm calm at 180, even though they're just 6 months apart. You know, when people were coming to me at 180, you know, they're saying, hey, what's going on? Like Tesla is like, I want to get out. Or actually, my wife's like, you know, oh my gosh, or some family members like, look at Tesla, and they have all these reasons against Tesla, right? Why they're bearish against Tesla, why they want to sell Tesla, all this stuff. And I'm like, hey, just calm down, man. Like, look at the company, right? The company is doing great, right? Look at the Model 3. The Model 3 is doing great. People love the car, right? Look at their margins, right? Tesla's, you know, is able to achieve some decent margins on their Model 3 product at an amazing price point. Look at their growth trajectory, right? Look at their Model Y plans. Look at how much, you know, what Model Y is going to add to their income. And I'll just go through a lot of different things on the company itself, but then all this kind of perception and FUD and misinformation and all this stuff floods people's minds, where I'm just like hearing it from like even people close to me, and they're like, oh yeah, but can Tesla, you know, survive this, or, you know, there's a new car coming out, or maybe people don't want electric cars enough. And there's just so much misinformation, right? And people are swayed by that, but they're swayed by that because they also see the stock price going down, and they're like, oh my gosh, something must be wrong, right? And they're not able to separate, right, the reception that Tesla is getting on the stock market and their stock price with the health of the company. See, these two things can be correlated, but they also can be very separate. And a lot of times they are separate, where, again, a company can be very healthy, but their stock price can be very low, or their company can be very sick and their stock price can be very high. And so the key is you need to be an independent thinker, apart from kind of like all this propaganda in both ways, and you need to start having your own projections, your own numbers, and your own idea of what it takes to make a stellar company, what the trajectory of a stellar company is. Does this company meet that, right? How is it going to make money? When is it going to make money? Now, here's the thing. You've got a lot of people pushing a lot of things in both directions. Now, you have people on the bear side that make up, I won't say make up, but it's kind of like, it's disillusional, right? Where people are just, coming up with these amazing, theories on why Tesla is worth nothing and etc. and has no future. But then on the flip side, you have these like delusional theories from the bulls, and I call them emotional bulls because they look at Tesla in an emotional way, right? They think, oh yeah, Tesla is going to be like X amount of, price by a certain year. And it's like, okay, come on. Tesla, like for Tesla to be 3,500, okay, I'll just lay it out. For Tesla to be 3,500, all right, I'll just lay it out. For Tesla to really be $3,500 by 2023, it's like that doesn't even like make sense. I mean, sure, like even the projections that you lay out, like it makes no sense. Like there's a rational kind of multiple price, earnings multiple. Even I have my own type of set of numbers I run. I call potential price over earnings multiple that I give certain companies, considering their growth rate. But even with that, and I'm a very big bull. I've been a very big bull since the early days, 2012, and all throughout this time. And even from my projections, like $3,500 by 2023, there's no way I can pencil that out with projections. And it kind of like borders on, I wouldn't say lunacy, but delusional thinking or kind of hope. Yeah, a lot of hope. And that's the thing. It's like hope and emotion and bias is the enemy here. You don't want to be emotional and hopeful and base your thesis on that as an investor. Like this will just kill you. And so in a lot of ways, propaganda from the bulls and propaganda from the bears, it's like floods your mind, and it's like no wonder people are confused. They're like, how much is Tesla worth? Like who's giving like a practical analysis of, hey, this is how much Tesla's worth? Like you have zero or you have like $1 million like dollar stock. It's just like crazy. Here's where I'm coming from. Everyone, if you're going to invest in an individual company like Tesla, and if you're going to invest any large sum amounts, that depends on each person. I think you need to have your own projections, and you need to have your own independent thinking. You need a 1-year projection, a 2-year projection, a 3-year projection, a 5-year projection. You need to project and estimate what their revenue, Tesla's revenue, is going to be in 1 year, 2 year, 3 year, 4 year, 5 years, and perhaps in 10 years. You got to estimate the number of units they're sold, their margin. You got to estimate their net profit. You got to estimate kind of the growth rate. You got to have the basic numbers down, right? And you've got to have that down, and you've got to create a model where you're saying, okay, this is how much, I think investors are going to be giving in terms of a multiple based off of their earnings or potential earnings. And this is my rational model of what I think the company is going to be worth. And you need to check yourself against that model. And if your estimates after a year or two are not working out, you need to really have a deep dive onto whether this company really ever will meet your projections, or if something else is going on. Like you've got to have it look into, like, is this company really healthy or not, right? And you've got to get out if it goes against your objective kind of like set of analysis. Now, I've been doing this for a very long time. Ever since 2012, I have my own set of basic projections, and I lay them out. And initially, your projections don't really have to be that complicated, but you really do need to know, like, have an estimate how many units of whichever cars, etc., they're going to sell at what price and what revenue and what gross margin, and what their operating expenses are going to be and what they're going to be left with, and what kind of multiple people are going to be giving based upon, this type of company. You've got to have some basics down, right? And you got to track them year over year. And if it's not working out, you've got to like really hold yourself to that and really have some deep times of examination. Now, that's one of the reasons why I'm doing this channel, because I think there's, a huge amount of opportunity with investing. I think a lot of times it's taken in such a shallow way. Everyone's looking at these short-term news cycles and short-term price movements, and people aren't doing the due diligence of really saying, hey, look at this company. What are the basics? What are the foundations? And even with growth companies, they're not really looking into the basics of, hey, yeah, what's the growth like? 1 year, 2 year, 3 year, 4 year, 5 years out. They're not talking to the core users, right? To the early adopters. There's so much that I think investors are missing out, both on Wall Street with hedge funds and also retail investors. And a lot of it is bias. A lot of it is lazy thinking. A lot of it is trying to take shortcuts. But there's some fundamental things to go through that you need to have a solid base where you can be calm, whether Tesla's at 400 or whether Tesla's at 180, and you can have your own analysis. And it doesn't matter if, this person is selling or this person is buying, like you understand, what's going on. You have a pulse on the company, you understand the health of the company, and you understand, what you think is going to be worth at a certain point. Now, I know, some people will be like, okay, just tell me what to do, right? And to a certain extent, yeah, I will share, as according to what I want to share in terms of my time and my desire, because it's like I need to be motivated to share. But yeah, I'll share here and there kind of what I'm doing to come up with my own projections. But yeah, I don't think it's actually asking too much in my opinion. And this is again for people who are going to invest, right, a large sum amount of money in an individual stock. There are many opportunities out there for stocks. It's an open field of investing, right? And a lot of times it's there for the picking. It's for those who will have the disciplined approach of going deep in analysis, reject bias and emotionalism, and really get to the heart of things. The opportunity is immense, right? To have immense returns and to grow assets and to be just, I think, to be responsible for whatever you've been kind of given to manage. And so anyways, I'll end this video went much longer than I expected, but anyways, subscribe to my channel, and I also want to ask if you could post this video if it's been helpful for you. Only if it's been helpful, post this video on your favorite Facebook group, in your favorite Reddit subreddit, in your favorite forum, etc. It'll help get the word out, and that'll help kind of continue this channel and help me get some more videos out. All right, have a great day, and we'll talk to you later.